What is a qualified longevity annuity contract, or QLAC as it's called? How a QLAC works in retirement plan. So what is it, and where does it fit into a retirement plan? QLAC, the Q stands for qualified, such as an IRA, 401k, 403b. L stands for longevity. This is a lifetime of income. A stands for annuity, issued by an insurance company, and C is a contract. This is fixed and guaranteed. So one attribute of the QLAC is that it's tax advantage. Think of it as carving out 25% of the IRA, or a maximum of $125,000 for an individual. They could elect to defer up to any age, up to age 85. They're not required to include this money in their required minimum distributions, and this is one way to reduce for a period of time distributions and electing income into the future. So here's a fact. At age 70 and a half, IRAs are required to distribute per the government an amount so that Uncle Sam gets paid, called the RMD, or required minimum distribution. People are living longer, fewer have traditional pensions. Making the money last is becoming more important. Here's a recent case I worked on. Got a 67-year-old female. It's $1.2 million, 4% conservative overall return. We carve out $125,000. So over in the QLAC, you can see that there's less cash flow because we're deferring that income until age 85 in this case. So with the lower income comes an opportunity to not pay as much in taxes. Now we're going to look at cash flows. So we notice that we've rounded off the income. So in ages 75 and 80, you can see that the standard IRA pays a little bit more. However, the QLAC makes up for it at age 85 forward. We can see that the income is higher under the QLAC. So if somebody's going to live a really long time and they sense that and they've had that in their genes and their health, this is a strategy they may want to consider. So here's a visual of it. You can see that the income level on the right drops a little bit versus this straight line, which is the traditional IRA. Here is the QLAC. But also notice that at age 85 and higher, there is a higher income. Some practical advice. Choose a quality carrier. This is for a lifetime. Get clear on the death benefit provisions. Remember, this money's locked up. Having an appropriate amount of liquidity is critical. If you're an aggressive investor, this strategy is tied to a fixed guaranteed annuity, and the rate of returns you're going to consider low. If you die before the payment starts, the rate of return on a QLAC is likely to be a return of premium. So here's the reality. Every person's case is a little different due to taxes, risk, liquidity, health, and life expectancy. Getting clear view will give you the confidence to choose what's best for you. If you want help from an experienced planner and do not have one, you can reach out to me and discuss your situation. You can just email me at scott@stewardshipmatters.net. That's scott@stewardshipmatters.net.